please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, as the mega merger of Idea as well as Vodafone, that's coming thick and fast, and approvals are coming in. Sources tell CNBC TV 18 that the focus shifts to the management and the board composition of the merged telecom behemoth. Nisha Poddar joins us with some exclusive details on what the board could look like. Nisha.
As the mega merger of Idea and Vodafone India is in its final stages of getting all the approvals, the promoters' focus has clearly shifted on the management as well as the board composition. Sources with direct knowledge suggest that final touches are being given to both these aspects, and some crucial decisions could be announced by the end of January is what we gather. At least sources with direct knowledge have been sharing some names which we have at this point. D. Shivakumar, who recently, remember, joined Aditya Birla Group as the head of strategy, is likely to be nominated by Aditya Birla Group on the board of the merged company Idea Vodafone. Now, we also gather that Vodafone PLC could be really nominating two of their top-level executives, Vittorio Colau as well as Nicholas Reed, on the board of Idea Vodafone. Now, we already know that Kumar Mangalam Birla is going to be the chairman. So, we have some 4 names and we have some understanding on the board composition. Of course, one more nomination each from Vodafone and Aditya Birla Group will have to be made, and all eyes would be also on the CEO's position coming in for this merged behemoth in the telecom space. So all eyes would be on that. Of course, Manish Tawar recently, who joined from Denver Networks, he joined Vodafone India, would be the CFO of the merged entity. So all eyes would be on the full board as well as the CEO of the merged entity, and that is something that the markets would be watching out for the next phase of Idea Vodafone India.
Okay, all right, Nisha, thanks very much for that. Well, Federal Bank is going to be in focus today, reacting to its Q3 performance. It reported an operationally weak quarter, which came out post-markets yesterday. Abhishek Kothari is here with the details. Abhishek, morning.
Well, morning, Ekta. The point is that operationally it's a very weak quarter, despite the fact that advances growth have been at 22%. If you look at the gross slippages at 435 crore and net slippages, that is gross slippages minus the reduction, recovery and upgrade part at 190 crore, both are at the highest point in the last 5 to 6 quarters. And even if you look at the operating profit, while the fact is that loan growth has been at 22%, operating profit has declined from 31.5% in Q3 FY17 to 46% in Q3 FY17 to about 18%. So that speaks that earnings momentums are not as good as the balance sheet growth, and therefore even the net profit growth is at 5-quarter low. Loan growth has declined due to elevated slippages. So when you look at the loan growth declining from 31.5% in Q3 FY17 to about 22%, annualized slippage ratio has increased from 1.64 to 2.03. Now the current slippages of 435 crore include an educational loan of about 71 crore, but despite the fact that you remove the 71 crore, the normal run rate has been between 250 to 280 crore, and even on that front at 340-345 crore, it's on the higher end. So overall, I expect the stock to react weak in trade today.
Okay, all right. So that stock should open up in the red. Thanks so much, Abhishek, for joining in and giving us those details. But let's move on. And Newgen Software Tech, that IPO opens up for subscription today. Naveen joins us early this morning to give us details about why they're raising this money and what they're looking to do. Hi Naveen, good morning.
Good morning, Nigel. I'll begin with what exactly does the company do. So this company is basically into software processing and enterprise content management as well as business processing management, and basically it's spread across for around 450 clients across 60 countries. Almost 30-35% of their revenue comes from exports. So that is also a key factor. So if you talk about the business verticals that they cater to, the likes of banking, IT, PSU companies, as well as government organizations, insurance and healthcare space. So this is the broad arena of the customers that they cater to. Talking about the issue, remember the company is raising around 450 crore rupees, out of which 330 crores is as offer for sale. Now talking about the total market cap, so post-issue, the market cap at the issue price will be around 1,700 crore. Remember, the issue band is anywhere around 240 to 245 per share, and the promoter holding post-issue will be 66%. Talking about the financials of the company, if you see the revenue, that has seen a steady growth of close to 21%. But the concern for me at least, will be that the other expenses to sales. So that ratio has increased from 30% to 39% in the last 4 to 5 years. The margins also have been more or less wobbly, I would say 22% in FY13, 12% in FY16 and 16% in FY17. So there has been some bit of a volatility on that. Talking about the objectives of the offer, remember the company, majority of it will be using for different purposes, the purchase and for a furnished office as well as for general corporate purposes. Valuation wise also, we don't have a clear peer in India, but still it's trading anywhere around 30 times FY20. Back to you.
You're still tuned in to Power Breakfast on CNBC TV 18. Well, the Urban Affordable Housing Mission, or Pradhan Mantri Awas Yojana Urban, has been a flagship scheme of the Modi government, but the real estate sector has had a lot to grapple with over the last 1 year. The aftermath of demonetization, a new regulator, and even a new housing minister. So, how much ground has the PMAY covered in 2017? CNBC TV 18's Kevin Lee reports on the same.
The 2017 budget allotted 29,000 crore rupees to the Pradhan Mantri Awas Yojana. However, a lion's share of that money went to the rural arm of the Affordable Housing Mission, with the urban arm ending up with just over 6,000 crore rupees. This 6,000 crore rupees was distributed between 4 verticals. The beneficiary-led construction vertical to convert existing kacha houses into concrete housing units, the public-private partnership model that seeks to rope in private developers to the affordable housing cause using government land, an in-situ slum redevelopment vertical, and finally, the credit-linked subsidy scheme, which gives home buyers a discount on interest payable on home loans taken to buy affordable housing units. Needless to say, some verticals have done better than others.
The most popular is right now beneficiary-led construction, which constitute nearly 57%. So far, we have already sanctioned over 37 lakhs houses. It is nearly 37.5 lakhs houses we have sanctioned.
The credit-linked subsidy scheme has also been popular, exceeding its 1,400 crore rupee budgetary allocation 3 months before the end of the financial year.
Under the credit-linked subsidy scheme, I've told you last time it will do, so we are already at about 1639 crores, which has covered 80,880 units. And the good news is that all these houses are up, either completed or in the process of completion.
The PPP vertical has been less successful. Although the new housing minister announced 8 models for private developers to tie up with the government to develop affordable housing projects in September, not a single such partnership has fructified. As for the slum redevelopment vertical, most state governments are still finalizing their policies. The success of 2 verticals out of 4 has put the Housing Ministry in a very good mood, but it has also increased expectations from Finance Minister Arun Jaitley when he makes his 2018 budget speech.
Budgetary allocation was 6,000 crore and we are getting another 13,000 crores for the balance because there's so much of sanctions have been there.
But money is only one part of the equation. Although 37 lakh houses have been sanctioned, over 1 crore houses need to be built in the next 4 years, a daunting task. So while the real estate industry will be happy with more money and policy changes coming in, the real challenge will be converting sanctioned houses to concrete homes for Indian citizens. In Mumbai, Kevin Lee.
Well, we have Manisha Gupta joining in this morning to tell us what she's tracking in the commodity and the currency market, and no prizes for guessing. Crude prices probably is top of mind. Manisha, morning.
Oh, it absolutely is. With 7% gains in this year and trading around $70 per barrel, it clearly has, beaten many other asset classes, the kind of run-up that we have seen here. The geopolitical concerns, the weakness in US dollar, the strong demand estimates, and expectation that the supplies will continue to decline, all of these factors have been supportive for the crude oil prices. Add to that the speculative long positions at record highs, and that's keeping the prices higher as well. And the Indian markets clearly are bearing the brunt of that as we see all-time high diesel prices in the Indian markets, because nearly 90% of your fuel, the cost of production that is, comes in directly from crude, and that really seems to be impacting. But it's not just crude. If you look at the base metal prices, you have the zinc prices hitting a new 10-year high. You have the gold prices trading at a fresh 4-month high. And if you look at the other metals, the steel, the iron ore prices also have continued to gain up today. The economic data has been positive. The currency play clearly into the recipe, because you are looking at the weakness in US dollar, but the euro is trading at a 3-year high. You have the Japanese yen, the pound sterling trading at a 4-month high. And the economic scenario coming in from the 18 euro countries also has been positive. So almost everything tells you that the demand is continuing to stay good at these levels.
Okay, all right. Thanks so much, Manisha, for joining in and giving us those details. But let's shift focus then. Let's go across. I think, we'll get to Mangalam in just a bit, I think so. All right, Mangalam's with us. Good morning, Mangalam. Well, in the derivatives market, yesterday, I think, call buying, that was something that did come out. And I think the FI is going a little short on the index futures.
Absolutely. The FI is going short in index futures, call buying, and also, more importantly, put writing. So they still believe with the run-up that we've seen, the downside is firmly protected. So if you take a look at it, looks like the FIs are buying via market index, or playing the market via index options as well as stock futures, because nearly 1,700 crore worth purchase in stock futures as well. So 550 crore worth selling in index futures, something that we witnessed one could sense during the day as well, given the Nifty premium. That one's come down to naught, really, just 1.5 points versus about 5 points. But in index options, 32,000 long index calls added and 24,000 short index puts added. So the Nifty put call ratio closer to that 1.8 mark is a little heady. So that is something we'll keep an eye out on, especially given the fact that the IVs are high and the India VIX has moved higher too. If you take a look at the writing on the puts, yesterday we were talking about the 10,700 put. By the end of the day, it added close to 30 lakh shares on the short side. 10,800 put writers are now also active, believing that the markets can go much higher. And the 10,800 call writers, though, they've written about 9.5 lakh calls for a premium of 40 rupees. So that is something we'll watch out for. Coming to the stock futures bit now, 1,700 crore worth purchase in the stock futures. And there it was all the frontliners, the likes of HDFC, Twins. If you take a look at ICICI Bank, Kotak together, they added a large part of that purchase that we saw in stock futures. But in the mid-cap space, 15 stocks in F&O ban. Keep an eye out on that. We have Capital First and IFCI entering ban as well. So watch out for all these stocks.
Okay, all right, Mangalam, thanks very much for that. Well, on to our bullseye corner then. We have our contestants this week, Sameer Chavan, Jay Thakkar and Vishwesh Chauhan, battling it out for the strongest portfolio. Let's listen in to their picks.
Our first call is a buy call on Hathway for a target of 52, stop loss 44.8. Second buy would be in Karur Vysya Bank for a target of 140, stop loss 120.5. Third buy would be on Rallis for a target of 304, stop loss 262. And a solitary sell call would be on TVS Motors for a target of 709, stop loss at 757.
The first buy recommendation is on Indian Bank. One can buy Indian Bank for a target of 398 with a stop loss of 376. The second buy recommendation is on India Cements. One can buy India Cements for a target of 219 with a stop loss of 194. The third buy recommendation is on Group Finance. One can buy Group Finance for a target of 553 with a stop loss of 514. And the final buy recommendation is on Exide. One can buy Exide Industries for a target of 245 with a stop loss of 227.
First is a buy on India Cement with a stop loss of 195 and for the target of 210. Second is a buy on Group Finance with a stop loss of 522 and for the target of 555. Third is a buy on Karur Vysya Bank with a stop loss of 123 and for the target of 136. And last is a buy on Gati Logistics with a stop loss of 140 and for the target of 153.
Okay, then on that note, I think we can wrap up on Power Breakfast. You stay with us. Bazaar Morning Call comes up next.